Is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to our webinar for August 2018 called Ask the Experts Development Meet Accounting. It's presented as a partnership between Build Consulting and Community IT Innovators. In this webinar, a panel of experts from Build Consulting will be answering the questions you submitted in advance regarding how development and accounting can better work together to manage financial data. Couple of quick housekeeping notes before we get started. Please feel free to ask additional questions via the chat feature in GoToWebinar. We'll get to them as we can, or we'll try to weave them into the conversation, and we may have some time left at the end. Please try to avoid multitasking. You may just miss the best part of the presentation. And just as a reminder, links to the recording and slides will be shared via email after the webinar with registrants, so you can look forward to that if there's any part of the webinar that you'd like to share with a colleague or revisit for your own purposes. Now a little bit about Community IT and Build Consulting. We both work exclusively with nonprofit organizations to help them make information technology and system decisions that support their mission. We both take a collaborative approach, empowering our clients to make informed choices for their organizations. Community IT is focused on providing outsourced network management and technical support services. Build Consulting leads in the social good sector by providing 3 different types of services that complement those provided by Community IT. The first is we serve as part-time or interim chief information officers for nonprofits. We also perform business process, technology, and data projects ranging from strategic assessments to tech roadmaps for system selections and implementations. And with Build Teams, we provide outsourced data managers with deep development operations experience as well as nonprofit CRM expertise. My name is Peter Miras. You see me on the left there, and I'm serving as the moderator and as a panelist for today's discussion. I was one of the co-founders of Build 3 years ago after a 15-year career in marketing, development, and information management for both the nonprofit and the for-profit sectors. And over the past 3 years, a good amount of my client projects have revolved around selecting and implementing or improving existing CRM and ERP systems, including integrations between the two. And the reason I'm doing this work is because I'm passionate about helping nonprofit organizations fulfill their mission by leveraging technology. And that's why I'm here today with you. I'm very happy to be so. I'm happy to welcome 2 of my colleagues from Build Consulting who, along with myself, will be serving as our panel of experts for today's session. Debbie Cameron, will you please introduce yourself?
Sure. Hi, everyone. My name is Debbie Cameron. I'm a managing consultant with Build Consulting. I started in consulting about 20 years ago with a Big 5 firm, and after about 6 years was looking for more purpose in my work, so I joined the nonprofit practice. I eventually made my way into working directly for a nonprofit, wanted to fully embrace the other side, and then joined Build because I thought it brought those 2 worlds together perfectly. In particular, I like how Build is software agnostic because it really allows me to not only be an advocate for my client, but provides me freedom to help nonprofits approach technology.
Thanks, Debbie. And we have another Peter with us today, Peter Gross.
Yes. Hi, everybody. I am Peter Gross. You can think of me as Peter G to distinguish from Peter M. I am also one of the partners of Build Consulting. I actually started my career post-college working in nonprofit organizations, and pretty much the first one I worked for was doing development work, fundraising and grants management and program management and advocacy for a civil rights organization in Detroit that was called Focus Hope, a very inspirational place that sort of cemented me being in the nonprofit sector. I went on after 8 or 9 years working in nonprofit organizations. I went and actually worked for Blackbaud for 6 years in the early 2000s. And then have been consulting in one form or another since 2007. What keeps me engaged in this work is finding new and different ways to help the people that work in nonprofits achieve the kind of change they're looking for. And that's grounded in a lot of years of seeing a lot of frustration from organizations that are unable to sort of break through either organizational or cultural or individual kind of barriers. And that's a lot of what we try to focus on at Build, not only the technology side, but the people side.
Thanks, Peter. And now we're just going to move on straight to your questions. We received a number of excellent questions in advance from registrants, and we boiled them down into 6 that we'll plan on answering during this session. As I said before, if we have extra time, we'll weave in your questions via chat. And this is an informal collaborative discussion for us. And if you would like a more comprehensive answer to a particular question or something that speaks more directly to your individual situation, please contact us and we'll be happy to talk with you, or whether that be via email or over the phone, and we'll share some information about how to reach us at the conclusion of this webinar. So we're just going to step through the questions one at a time, give our best shot at answering them, and as I said, feel free to chat in your complementary or follow-up questions. So the first question is a really fundamental one, and it's, what are the differing viewpoints or priorities of development and accounting when it comes to managing financial data? Peter G., why don't you kick us off with this one?
Sure. This is a topic that is actually pretty close to my heart, because it's conversations that I've been having for years with organizations. And I tended to focus more on the development side of things in the earlier part of my career, but have since been, involved in sort of both sides of the house. And the truth is that this is not unique to development and accounting. I think any organization, whether that be a nonprofit, a company, a family, anything else, we have a tendency as humans to get caught up in our own perspective. And like I said, even in nonprofits, that is not limited to development and accounting. But I would say development and accounting is sort of the classic Hatfield and McCoys of the nonprofit world. For reasons that I think are understandable, that just tends to be a point of tension in organizations. Not every organization, but many. But I think it's important to recognize that each of the functions within an organization necessarily comes to the table with its own unique and valid mindset and its own set of priorities. So just as an example, development folks tend to be focused on, how can I build relationships to raise the most money? They get measured on how much money they raised, what kind of relationships they built, how happy their donors are, how connected they're able to make people to the organization. And thus, that's the lens they come to with managing financial data is I need to count the money I raised, and I need to make my donors happy, and et cetera. Accounting folks, on the other hand, tend to be focused more on sort of managing financial data in a way that is, and you can pick your adjective, compliant, accurate, risk reducing, et cetera. They're asking the question and they're getting evaluated, how can I make the auditors happy and protect the organization in the most effective way? And both of those are 100% legitimate viewpoints. And we'll talk a little bit later about sort of how we try to resolve those two different points of views. But they tend to be more competitive rather than complementary. And in our experience, it really can be complementary. Debbie, did you want to? Sorry.
I agree. No, sorry, I'm collecting my thoughts. I agree with a lot of what Peter said. I think it's important for both sides to understand each other's perspective and points of view. I think, education can go a long way around this. In a lot of ways, the accounting team has an obligation to adhere to a number of guidelines to ensure that the financial reporting for the organization is accurate and they're in compliance for when the auditors come on site. And I think a lot of those guidelines are not always clear to all the stakeholders across the organization. And I think, a good example of this, or something that I have seen most recently at clients, is around revenue associated with Facebook and mobile apps and the process of recognizing that revenue. Understandably, the online teams want to recognize that revenue as soon as it's committed, but in order to do so with a certain level of accuracy, accounting really needs to wait until that money comes in the door, and that can take 30 to 45 days sometimes. And so unless that's communicated to the development team, they're just sitting there waiting for that to show up on their dashboards and their reports, and they're wondering why it's not. And I think, if we just focus on creating an environment that fosters communication, that allows for cross-training, and I certainly don't mean having some lunch and learns focused on the fundamentals of cost accounting, but just to enable everybody to have a working understanding of the guidelines and principles around the financial reporting and staying compliant with audits. I think that that communication and education can serve as a cornerstone to build a successful relationship between the two teams.
Yeah, those are great points, and a lot of what we end up doing is bringing development accounting together and sort of facilitating conversations between the two, because often there's a lot of, when they do get together, there's a lot of talking at cross purposes. So it's really a facilitated sort of change management operation to try to bring those two diverse perspectives together. So the question too sort of builds on that. It's a little bit more focused on gift records. And the question was, how can we resolve misunderstanding between development and accounting about how to categorize gift records? And one of the things that we deal with a lot as a consulting firm in helping organizations with their donor management or fundraising or CRM systems is how those transactions are categorized when they come in. It can be a very thorny and challenging process to keep straight, particularly when there's a lot of different kinds of, a lot of revenue streams, a lot of different channels. So Peter G., how would you go about answering this question?
Sure. The issue of sort of when we walk into an organization and they're having this particular challenge, the extra added challenge of that is that on a day-to-day basis, they're having to work in the systems that they're in with the categorization schemes that they have. And at the same time, they're trying to, in one way or another, envision what a better system would look like. And it's very easy to get mixed up between the two and to get sort of off kilter. It's sort of like trying to change your gift categorization stream in sort of mid-year or mid-work is like trying to work on the engine of your car while it's flying down the highway, right? It's just a very difficult thing to balance. And so I think for organizations that are having this kind of a struggle of a more effective way to categorize their gifts, I think it's important to take a step back. And the first thing to do is to forget about the systems you've got, forget about the categorization that you've got right now. And as Peter said, have a facilitated session, a collaborative session in which the first thing you're doing is actually defining from a business perspective the ways in which the organization needs to categorize gifts. A business perspective, not a technical perspective. So as examples, development, it's very important that they honor the donor intent of the money, right? Obviously, it's also important for accounting because it needs to get put in the right place and spent the right way. Development needs to know the various ways in which the money was acquired. So in some organizations, that's a relatively high level, relatively simple set of choices you make about how that money was secured. And in some cases, for organizations that do sophisticated direct mail, it's actually an incredibly complex situation. Development also cares about sort of who gets credit for the gift, either at the individual level, the team level, the campaign level. And there's a variety of other ways that development could care about this as well, obviously. From the accounting perspective, They care about how that information is going to flow into the GL in the various ways that the GL string might reflect different categories. They obviously care about payment type. They care about the source of the money for reconciliation, a variety of other pieces. What we do, excuse me, what we do very simply is draw a picture of the business need for categorization of gift records and make sure that we're agreed across the organization, whoever cares about those particular categories, that on paper, we understand this is what development needs, this is what accounting needs, this might be what program areas need, et cetera, et cetera. Once you've agreed on that scheme, then you can start to look and say, all right, we have this finance system, we have this fundraising system, we might have these other systems. What's the best way for us to get that information categorized based on the systems we have? And I was intrigued by Debbie's Facebook example, because that's sort of a classic example. There's lots of times where development needs to be able to account for the fact, sorry to use the word account, needs to be able to capture the fact that they have secured funds, even if those funds are not recognizable from an accounting perspective. So there can be certain kinds of transactions in a fundraising system that are recognized as not posting until something happens down the road. So it might be a pledge that is conditional. I want to get credit for the fact that I got a $100,000 pledge because I did get that at least verbal commitment, but the accounting team isn't ready to recognize it. And so there's ways to do that using both systems for the things that they are best at doing. And in the Facebook example is the same way. There should be a way to record the fact that that commitment has been made from Facebook, but not have it not reflected or reflected differently in the accounting system, so to recognize that it is not a legally, fiscally recognized donation.
Yeah, and I think, taking the time to make sure that you do define the business rules around how things are coded is a worthy investment of time. I think it's the importance of how the gifts are categorized it's important because of how it flows into the general ledger. And when that gift coding is wrong, I think the downstream impact, which is the fact that it affects financial reporting, I mean, no one in the organization wants that. And so I think everybody wants to work together to ensure that it's done correctly and it's done in a way that makes sense for the organization. And I think, again, education serves as a cornerstone in this as well. I think training and understanding the structure really is what's going to drive success. I had one client who implemented a CRM and they had an integration directly to their GL. And when one common problem they had was around charitable remainder trusts. And, typically when you have a charitable remainder trust, once you calculate the future value, you recognize the revenue and you set up the receivable. And the problem they were having is when the cash receipts would come in, no one was aware or knew where to look to make sure or to see that there was an open trust. And so when the trust was terminated and that cash came in, it was being oftentimes recorded as outright bequest revenue. And they were consistently overstating revenue, and each month they would need to go back and make an adjustment, and the auditors didn't love that. And so, they decided that the best way to deal with that was to invest in training. They did have some audit reports set up, but you can also look at it in terms of a systematic control and where you can put in systematic controls. I know another frequent occurrence of where gifts are miscoded, as Peter mentioned before, is around pledges and attributing those payments to those pledges. And I had a client set up their CRM so that if you were entering a donation on a constituent record and there was an open pledge on that record, you could not enter the donation without being notified about the pledge, the open pledge, so that you would double check to make sure that that shouldn't be appropriately attributed to the pledge. So I think, you know, I think education, understanding on this topic is also key. And I think, you know, looking where you can put controls in place is also really important.
Thanks. I know we're going to talk about this a little bit in the future, but one of the things that we'll discuss and has bearing on this is that a lot of times accounting wants to be able to rely on how gifts are coded inside of the CRM system, but they just don't trust that the development team is going to regard those records as being an AR or accounts receivable subledger and treat it with the same level of strict diligence that the accounting team would. So we'll get into that a little bit here, but that's another aspect of resolving the misunderstanding between development and accounting for how to categorize gift records is that there's a level of process diligence that's required in order for this records in the CRM to serve in the way that is needed for the organization. So,
can I add one thing?
Yeah,
Peter?
go ahead.
Yeah, as you were saying that, I was thinking about I think one of the keys to resolving misunderstanding, in some ways a prerequisite to doing it, is a lot of organizations have historically held the entry of and the categorization of gift transactions in one department or another. I would say more often than historically it's been in accounting. And part of the process of resolving that misunderstanding is building up a mutual understanding that these gift records are organizational assets. The gifts are as well, obviously, because the money that comes in is funding for the entire organization. But the records themselves are assets that belong to the entire organization. And if the categorization scheme and process is really too heavily weighted in either direction, development or accounting, we see downstream effects in either direction. I really like that wording that Debbie had, because if we don't categorize the fiscal categorization components correctly, then we have really terrible effects downstream in terms of financial reporting and auditing and all of those things. And if it's weighted too heavily on the accounting side, we end up with the inability of the fundraising office, development office, to actually utilize that data to do analysis and to make decisions about where the best places are to deploy resources. So recognizing these systems overall, but gifts and constituents in particular as an organizational asset, I think is a really important part of breaking through this barrier of resolving that understanding.
Right. Yeah. So moving on to the next question. This is one that I get a lot. Our chart of accounts is currently very complex and confusing, which makes it very difficult to map gift records to the GL for integration. Is there a solution? I mean, we have seen some labyrinthine charts of accounts, and sometimes justifiably so. Debbie, how would you go about answering this question?
Yeah, I would agree. I would say you're not alone with this challenge. I think, you know, typically nonprofit accounting staff and other resources are often thin, and you know, as a result, many nonprofits struggle to not have their chart of accounts grow into a very complex structure. I actually have a client whose general ledger is so complex that they're no longer able to embed their general ledger coding into their online donation forms, and so they now are living with a process where they once just downloaded the information and then uploaded it into their financial statement. They now download the information, they run a macro on it, they run it through a pivot table and manually manipulate it, and then it's ready to be uploaded into the GL. And I think when you find yourself with a process that becomes that complex and manual, or you find yourself really struggling with a very complex, difficult process in coding gifts, that it's important for the organization to step back and say, hey, do we need to audit our chart of accounts? Do we need to take a look and see where we can streamline, where we can, group things together? And I think when you're going through that process, I think some important questions to ask are, do we have the right level of detail? I remember a college professor once saying that just like snowflakes, there no two chart of accounts are the same. And I think that's one thing that a lot of organizations struggle when they look at their chart of accounts is, how can I tell if I have enough detail? Because they can't necessarily look at another chart of accounts for that guideline. And I think, you really just need to stick with the best practice of aiming for the smallest number of accounts that still provide you the level of detail that enable you to make informed decisions and create valuable reports. And in the vein of reporting, I think you need to step back and ask yourself, does it summarize your transactions in a meaningful way, or are there ways that accounts can be grouped together? Because going to that extra level of detail really isn't giving you any additional insight into the financial health of the organization. Another thing I think it's important to look at is the naming system clear? Are we using acronyms or accounting jargon that other folks in the organization maybe are not going to be able to interpret as easily? And then, always try to align it with the way you're budgeting as well.
Yeah, I think those are great points. And I will say from the technical side, a lot of clients find benefit when they're compelled to look at different accounting systems than their current systems for some reason, and maybe they're looking at a more modern ERP platform. They get exposed to more modern or more dynamic ways of managing charts of accounts, where it's more of a relational data model. So you end up with a smaller core set of accounts in your chart of accounts, and a lot of those other classifiers are spread across other data attributes, and makes it a lot easier and flexible for nimble reporting as well. So there's a lot of opportunity that organizations find for new ways of managing their chart of accounts that actually make it easier to map the flow of data from the CRM into the ERP system. There's just more flexibility in how you connect things. Next question is, what are some of the key problems with how nonprofits manage gift records that make life hard for accounting? I'll give an example to get the ball rolling. I had a client once that when I came into the organization wasn't marking gifts as posted in the CRM when they were moved to the GL, and they weren't using gift adjustments to make corrections to the original gift record moving forward. So basically what that meant is that rather than creating an adjustment, every gift that needed to be modified in some way was edited in the original record. And of course that it created all kinds of problems for reconciliations between the accounting system and the CRM. So figuring out a way to mark gifts as posted once they're moved across and locking them in the system so they can't be edited, and then making diligent and appropriate use of gift adjustments is a big thing. And that's an area where organizations aren't implementing that. That's one of the first things that they should look at to make life easier for themselves, so they don't have to go back looking for months to find that one gift that was improperly modified to make the reconciliation work out. Peter G., do you have anything to add?
Yeah, I mean, I think that's a really good example, and it's, what I was thinking about was sort of a broader point that encompasses the one you just made, which is, I think for our clients that have had challenges with the quality of their gift data and their ability to utilize that gift data, it has a lot to do with a lack of a clear and consistent and enforceable workflow for how every transaction gets entered into the fundraising system. So, again, human beings have a tendency to try to figure out things that violate the rule and do workarounds, and I get that. But that GL posting is a perfect example, and I'll just use Razor's Edge as an example because it's, lots of folks have it, and there's a number of different ways to enter a gift into Razor's Edge. The two primary ones are you can enter them one by one into a gift record. You open up a gift record and you enter it. The other one is through what they call their batch process, and other systems obviously have a version of this as well. What the batch system allows you to do is actually to build in workflow, build in some automation that means fewer clicks, fewer mistakes, and that people are paying attention to each one of the fields that they need to, and that the ones that they don't care about aren't even in view. And that's another example, I think, where people, because they haven't come up with a consistent way of using the best parts of whatever software system they have, they end up with where they miss things, where they make errors. Those errors either don't get identified until they end up in a financial report, or when we're doing reconciliation, or when the donor says something because their acknowledgement letter was wrong. And the more we both leverage the natural capabilities of whatever system's in place, and the more we enforce the rules about how gifts from soup to nuts get handled, the less likely we are to miss things, to make errors. And also, when we have a process, even if it's not perfect, but everyone's following it, it's much easier to then tweak that process or rework the process when we need to. Because if everyone's doing it, we're going to identify where those errors are. We can make adjustments and let everyone know what adjustments were made, as well as adapt to changes in whatever software system we have. So I think being as faithful to a good process as we can be, and leveraging as much of the capabilities of the software system, I think, are a couple of the larger mistakes. And I think, the gifts getting posted and not getting marked as posted when they move over to GL, that's another sort of classic thing that works actually quite well in something like the Razor's Edge. And very, very few folks actually take advantage of it, and that leads to all sorts of downstream problems.
I'm going to use this opportunity to insert an audience question, which is, our donation/membership/grants are first recorded in the Financial Edge in our accounting office, then given to development to record in Razor's Edge. Is this process being done backwards? So I insert this now because you mentioned Razor's Edge. Seemed like a good time to bring it up.
I'd be happy to take that one, or take the first shot at that one. So what I would say, without throwing anyone under the bus, is that in our experience, is that best practice is that appropriate transactions, by that I mean charitable, sometimes event registrations, memberships, in general, those should have a one-way flow, where the ideal is that information only actually gets typed in once. So I receive a check for $100 from Peter Miras. I go through my process, and I'm just going to use the Razor's Edge since that was the example that the questioner gave. I enter that into my batch in Razor's Edge with all the appropriate information. It gets assigned a fund, a campaign, appeal. There shouldn't be a moment, unless you have to reverse the check or do something like that, there should not be another moment where information is typed in once that gift has been entered, because that should then be, once it's gone through the posting process, it's converted into debits and credits that are then uploaded into Financial Edge, assuming there's no problems. Again, if there's an error, obviously we need to go back and make an adjustment. It might be just an adjustment, it might be a retyping something that had a mistake in it. But in general, you should be entering that data once, and then it should flow through the system without being touched again. That is the most efficient way, because only one person is typing it. It reduces the chances of errors, and is certainly best practice. Now, the only exception I would give for that is there are sometimes extremely complicated grant payments or even grant pledges, if you will, where the details are so complex that sometimes it really does have to be handled in sort of a dual entry way. We've worked with some organizations that don't do a lot of sort of regular fundraising, but do a lot of very complex grants and contracts. Those can be a little trickier to have sort of the one-way flow, but in general, gifts should be entered once and should flow to whatever accounting system is in place.
Would you like to comment on the which way is more appropriate part of the question?
Sorry, I thought I did. They should enter into the fundraising system and flow over to the financial system.
Okay. Just wanted to make it
partially just because I think that is the most efficient way to do it, and partially because there is no way other than re-hand entering it to get it out of FE and into RE. No way that I'm aware of.
right. Next question. What should we be thinking about when planning a CRM to ERP integration to help make sure the data flows properly? Debbie, would you like to take a shot at that one?
Sure. So I would say one common thing that I see across organizations that should be thoughtfully approached is whether or not you're going to set up the CRM as the accounts receivable subledger. It's a natural fit. It makes a lot of sense, as your accounts receivable subledger really needs to contain all the detail that supports your general ledger account, and your CRM, contains all of your revenue transactions, your donations, your payment history from your donors. So it makes a lot of sense. What I don't see always done is that fact be communicated across the organization. I was on a project recently where we were doing policies and procedures around a financial system, and we learned through meeting with various groups of folks that actually no one in the organization outside of accounting knew that the CRM was serving in that capacity. And when the CRM is treated as your accounts receivable subledger, the transaction data needs a little bit more attention, needs to be treated more like data in your financial system. And so you just want people to be aware of that. You want to educate them on that. And the other thing I would consider when you're looking at building that kind of integration is you're going to need reconciliation processes, and we strongly encourage our clients to document these reconciliation processes for many reasons, and I really would strongly encourage anybody to make sure they do so when they're doing that kind of integration.
Thanks, Debbie. Peter, do you have anything to add to that?
I was already starting to add something, but apparently I was on mute, so I'll try it again. No, I really like what Debbie said. I think there's a couple of things I would encourage people to think about when thinking about a CRM to ERP integration. The first one is that I think a lot of organizations we talk to and work with have a tendency to be a little overly focused on automated integrations, meaning I want to be able to click a button in my CRM and the data flies into my financial system, and no one ever has to know the difference. The truth is, that's a little bit of a unicorn. It's a difficult thing to actually accomplish. Even if you have both RE and FE, there's often some steps in there. And the truth is, if you develop a good process and a good categorization scheme for gift transactions, for most organizations, the quote-unquote integration isn't really all that complicated. And for a lot of organizations, it can really be handled through a file transfer that happens. Some organizations do it once a day, some do it 3 times a week, some do it some do it twice a month. It sort of depends on volumes and all of that. But so don't worry so much about automated integration, although there are some organizations where that case is pretty clear. The other thing I would encourage folks to think about is what level of detail do you really need to come across into your financial application? Historically, and I think Peter alluded to this earlier, historically, because accountants didn't trust what was coming out of the fundraising system, they had a tendency to want every bit of detail in there because they were afraid if someone asked them a question, they wouldn't be able to get the answer and they'd have to go into the fundraising system and they didn't know how to use the fundraising system and it was confusing and etc. If the fundraising system is well organized, and I realize that's not a guarantee, but we help lots of folks get there. If the fundraising system is well organized, most organizations should be able to send data over in summary rather than in detail. That's our recommendation, I would say, for most organizations that we work with. There are certainly exceptions, and the exception I gave before about organizations that really have some larger and complex gifts, some organizations will say, you know what, 98% of our gifts are going to come over in summary, but if it either hits a certain dollar threshold or if it's a certain kind of complex transaction, we're not going to bring that over in summary. We're going to bring that over in detail. So there exceptions can be made. But the simpler that process becomes, the less onerous the either integration or file sharing, file transfer becomes in that situation.
Yep. Those are good points. Moving on to the next question. I guess we'll just go to the next question. We're thinking about changing our CRM and or ERP system to help solve our financial data flow problems. How should we approach this process and what systems should we consider? That is a loaded question. It is, and it's my favorite question. It's my favorite question to answer because I generally don't answer it directly. Meaning, it's difficult in the abstract for anyone to say, you know, you should go to the Razor's Edge or Salesforce or anything else, or to Intact or to Financial Edge or those kinds of things. Because the question was phrased in the within the context of solving financial data flow problems, I mean, I think really the most important thing to be thinking about is many of the things that we've talked about already, which is in most cases, financial data flow problems are not about the underlying technology. They can be. There's certainly some systems that do it better and some systems that do it worse. If you're on a very old legacy system, it can be very challenging in some ways, either on the CRM or the ERP side. But the truth is, these are usually business challenges. If it's not flowing properly, it's largely because of how it is categorized, the process that's in place to create the transactions and then send them over, the match between how the CRM system is configured and the ERP system is configured. Those are usually much, much more important questions that frankly should be answered first, and then based on that business solution, identify what systems, do we need to switch systems, number one, and number two, what systems might be the most effective in not only the transfer of data, which is important but not by any means an overriding concern, but all of the other ways in which those systems might help you run your business more effectively.
Right, yeah, I think you need to look at the whole picture. I mean, the specific solution you select depends entirely on your requirements, and when you're making such a big purchase decision, you should look at those requirements as broadly as possible. I would say that generally our clients are moving from what I might call legacy or on-premise solutions to cloud solutions with better web capabilities. On the ERP side, more dynamic charts of accounts. Generally speaking, have better data integration or import-export tools, better APIs. Generally speaking, much better workflow management capabilities. On the CRM side, I think we've seen organizations move from outdated systems to modern or modernizing solutions. So modern solution, I might put
Salesforce or EveryAction or maybe Roy Solutions into that category. For modernizing, I would say RENXT falls into that category. On the ERP side, it's been mostly what we've been hearing lately and seeing at our clients is Intact and NetSuite. A lot of clients in the Microsoft Office 365 ecosystem or that are otherwise very Microsoft-centric wonder about Dynamics 365 ERP in part because whenever they add Office 365 licenses, they're offered licenses for Dynamics. We think for most nonprofit organizations that Dynamics 365 ERP won't be a good fit. It isn't a mature enough product for the average nonprofit. So again, there's a lot of different things to consider, a lot of different products to consider. We help clients go through structured selection processes, assessment and selection processes that leads to choosing the right technology. It's way too big of a subject to get into in any depth today, but those are some of the solutions that we see and help our clients consider. I've been doing a lot of work with Intact lately, and has been very good at solving a lot of problems for my clients. So here's a related question. Have you ever had two nonprofits who needed essentially the same application share the development cost? I have, yes, particularly when Salesforce was new to nonprofits. I've heard of other instances. Vendors usually shy away from it because it's unclear from a project governance standpoint who's driving the requirements. And I would say that 95% of such projects usually don't end well or end in some kind of failure that results in a re-implementation later on. Debbie, I know you've had some mixed experiences with this.
Yeah, I had a client partner with another organization. They were similar sized, and they needed some functionality that didn't exist in, and they had both chosen the same CRM system to implement. They were not successful. The main problem, we spent a lot of time lobbying the vendor to agree to do it, and then once the vendor agreed to do it, we launched into design. And it took a couple weeks into design for us to realize that while on the surface our requirements seemed alike, when you dug into the details, they were not. And so we basically had to start from scratch independently. Both organizations did. And we had wasted a lot of time lobbying the vendor and then going through that design and ended up having to pay for it, both the jointed effort and then the redesign. So that was not successful. There was another instance where two organizations, they pulled together, and the requirements ended up being fairly, even from the detail perspective, being fairly similar. So we were able to get development to a certain point, and we were able to share that cost to a certain point. I would say there was some hidden cost there in terms of just design taking longer, when requirements were communicated differently, even though it was the same requirement, getting through the different terminology and taxonomy of the organizations sometimes would take some time. So it took a little longer. And then in the end, when it was delivered, we still had to make it fit the unique needs of our client, and the other organization had to work to make it fit the unique needs of theirs. So all in all, in that second effort, it was more successful. And, I do believe we saved some money, but I don't know that the amount of money saved was worth the extra time it required of the staff and the project team.
Yeah, I think, sorry, go ahead, Peter.
No, I was just going to say, if, one of the things Build Consulting says a lot is that 50% of technology projects fail. And I would say close to 100% of those project failures are single organizations trying to get things done. If you just take the example we've been talking about today, which is how challenging it is to get two departments with different perspectives thinking about something as relatively simple as a gift record in a unified and collaborative way. And those are people that all answer to the same executive director or CEO. Anytime you add a different entity into the mix, the complexity level shoots up and the chances of success goes down. That doesn't mean that there's never a case where you could make that happen. But it's very, very difficult and would take an extremely strong project team to be successful with that.
Yeah, I mean, it depends on scale and a number of different things. But yeah, without knowing more about whomever submitted that question, feel free to follow up with us if you have some specific stuff, and we'll be happy to give a more informed viewpoint. But generally speaking, that's not worked out well in our experience.
Yeah, and I should just say, Peter, that I know there have been examples in the past, and this was a while ago, but of Razor's Edge customizations, which I will grant you back then was not an easy thing to do. But folks that came up with Razor's Edge customizations and then were able to recoup some of the cost by sharing those with other organizations who maybe took that customization and made some tweaks to it. That kind of approach is probably more likely to be successful than trying to build something from the ground up with 2 different organizations or more trying to figure that out.
Right, but then you have to be willing to be in that business, so to speak, and know what that entails.
Agreed.
Yeah.
Yes, indeed.
So we've got time for about one more submitted question, and we did get a lot of questions that are like this that are sort of more appropriate to ask your accountant or auditor. But it's sort of the question is what items in the new FASB financial reporting rules have the biggest impact on nonprofit GL structures and GL feeds from the CRM systems?
Please don't give that to me, Peter.
I'm assuming I will take responsibility for this. I'm assuming this question is pertinent to FASB topic 606, which is related to revenue recognition standards. And the thing I will say about that, based on my awareness of the 606 protocol or framework, is that it pertains primarily to sort of contract relationships between a nonprofit and the customer. So where the contract is implied or has some sort of pay for performance or some sort of fee for goods or fee for service component. So an example of a relatively simple and yet at the same time complex example of this might be if you were a donor and you buy a ticket for a fundraising gala event, and a certain amount of the ticket their value is provided to you, and there's sort of a contractual obligation for the organization to provide you with a certain value, whether it's the meal or other perks in exchange for that, and then a portion of it's also tax deductible. So essentially when you're recognizing that revenue, you might have to recognize it at the split at different times and in different ways. But I think for organizations that already have GL accounts in place for those kinds of sort of contractual or fee for service or fee for good type of situation, the GL might not need to change all that much, if at all. It's more about management making the decisions to clarify when an organization is in a contractual relationship with customer, quote unquote, or not. What are the performance expectations within that contract relationship, and how those need to be estimated, and the value of the transaction applied, and all of that different kind of stuff. So if you're interested in learning more about that, Grant Thornton put out a great article on that subject. So if you Google Grant Thornton Nonprofit 606, you'll see a good article about how nonprofits can implement those revenue recognition standards. And it encompasses both policy, compliance, technology, and reporting. And it's written pretty accessibly. At least I could understand it. And that means generally it's accessible. So that's all that we have time for today, really. We really appreciate everybody coming out to attend this webinar and the time that it's taken for you to participate. For more information, you can always check us out on our blog, buildconsulting.com/blog, or we have some learning resources available, particularly as pertaining to just trying to resolve internal change management issues in nonprofit technology or around nonprofit technology. Certainly that are applicable to many of the issues that we've been discussing today. And then we have a newsletter you can sign up for if you're interested in hearing more about these kinds of events or the content that we produce. You can always reach out to us, as I mentioned earlier, if you have any other
questions. Peter Gross wants me to know, you can post the link to Grant Thornton in the chat. I think you can. Feel free if you can identify that for those that are still on. Oh, there it is. Cool. You posted that to me privately, so. Anyways, we can tweet that out or post it through LinkedIn. Oh, there it is for the entire audience. So if you look in your chat window, you'll see that link. Thank you. And then these are the different ways you can communicate with us. So again, if you have a more specific question to your specific situation, or we didn't quite capture your specific need in our roundup, feel free to reach out to us via one of these mechanisms, and we'll get in touch with you and have a dialogue. And finally, just a final housekeeping note. Next month, at a date TBD, Community IT is going to be producing a webinar on how to secure Office 365. There's been a lot of security breaches, nonprofits lately, having to do with credentialed accounts or login credentials being compromised. And so there's a lot of things that you can do to kind of prevent against that in securing Office 365. I'm sure multi-factor authentication is going to be an aspect of that conversation. If not, I will stand corrected. So that's something you can look for in your email. How to secure Office 365 is the topic for next month. Thanks again, everybody, for attending. Again, you'll get an email follow-up with the links to the recording and the slides. And thanks, Peter Gross and Debbie, for serving as our experts today.
Thanks, everybody.
Take care. Have a good one. Bye.